Good afternoon. This is Larry McMillan with the weekly market update. Today is November 17th, um, 2019. The market made new all-time highs again on Friday, and it's been doing that repeatedly for a while now. It seems like it's gotten extremely overbought, but as you can see, overbought does not mean sell. So this thing has continued to press forward. The SPX chart obviously is very positive, has a lot of momentum, and has a couple of support levels along the way, but the first one of any meaning is probably all the way back at 30.65. I doubt if we pull back that far immediately. And then below that, there's stronger support at the old highs around 30.30. But in general, when the SPX chart is positive, it's difficult, even if other indicators are negative, it's difficult to do anything but remain on the long side. You can roll up long calls, take some credits out of positions, maybe take a partial profit, tighten your trailing stops or whatever, but you can't really short this market yet. Now, we do have a potential sell signal setting up, but it's been setting up for about 10 days and it hasn't confirmed yet. Equity only put call ratios are the put call ratio that we use to measure the broad market, and they're hitting very, very low levels right now, extremely overbought. There's been a lot of call buying since October 3rd, since that bottom on October 3rd. And these ratios are down to levels that we saw in 2018 at times, just preceding some serious declines. And, that could again be the case, but right now they're not on sell signals. They won't be on sell signals until they roll over and begin to rise. And we don't see any sign of that happening right now. We have computer analysis programs that look at these charts as well, and they agree that there's not a really large chance that they could issue a sell signal real soon. The part of the market that has been negative, though, is breadth. It has not been nearly as strong as you'd like to see on a breakout to new all-time highs by the index. And so we had some breadth sell signals during the week. They might have been canceled out on Friday's move, although breadth wasn't all that great again on Friday either. So these are a warning sign, I would say. We're getting, that sort of negative breadth is a sell signal, but we need some confirmation besides just that, because the breadth oscillators that we follow are very short term and they kind of hop back and forth between buy and sell pretty quickly. In a similar vein, we look at new highs versus new lows. New highs are still running ahead of new lows, not by a lot. They were about a week ago quite a bit, but that backed off some. But now that we've made, again, this push forward on Friday, they're back in line on the bullish side. The last thing we look at is VIX volatility, and VIX is bullish. I mean, it's just low. You can again say it's overbought, but that's not a problem. The market can continue to go higher while VIX is hanging around at low levels. What would be a sell signal is if VIX started to rise and rose above its 200-day moving average. Right now, that 200-day moving average is between 15 and 16. So we're kind of generally saying that if VIX were to close above 16, that would be a negative sign. So in summary, we've got a bullish SPX chart and we've got bullish VIX. The other indicators are pretty overbought and are either on sell signals or right on the verge of sell signals. So that's not as positive. But as long as VIX and SPX are in the positive camp, we are too. So as I said, we're rolling long calls up, maybe even taking a partial profit here and there. But certainly you can't short this market until there's some sort of a confirmed sell signal, and that we don't have those yet. Also, I just wanted to remind you that you can come to our website, optionstrategist.com, take a look at our newsletters. We have some pretty interesting things in those. And we also are starting a series of Saturday seminars that you might find interesting as well. optionstrategist.com.